Good morning and welcome back to another episode of Weekly Review of Indian Equity Markets. Uh, so let me give you with us. Let me start with a standard disclaimer. I'm not a SEBI registered investment advisor, and everything I do in this session is purely from an education purpose, and more importantly, for recording my thoughts as the market kind of plays out market price action plays out for the week. So none of the instruments that I discuss here are out there for or any kind of recommendation for buying or selling. They are purely from reviewing the price action of the market or that particular instrument for the week. So kindly please consult your investment advisor if you intend to do anything in the markets, and do not construe any of these reading of the market as a recommendation. And thank you so much for coming back again. So let's start the week with Nifty. So for the week, Nifty closed on a positive note, and it closed up 0.32%. So this is the fourth straight week of gains in the Nifty, and it seems like Nifty has been able to counter the pressure that was building up some 7 8 weeks back, and there was a fairly strong bit of pressure that was building. That Nifty has been able to counter, and looks like we are likely to stabilize here and maybe possibly move up again. So, so that's broadly the reading of the Nifty. From a structure perspective, if you look at the structure of Nifty for the week, or okay, so the structure of Nifty is something that I had drawn before I came here. So Nifty's formed a nice flag, and a breakout of this flag would confirm continuation pattern, and we are in all probability we may take out the high and move higher. So Nifty is in a good structure. We have seen a long tail, and then it is followed by the buying that we have seen over the last 3 4 weeks. And what we also see is that FIs have started coming back and building back positions again. So that's additional bit of positive data as far as the overall trading action is concerned. Uh, if at all, if I were to be interested in taking any particular trade, or the or position, it has to be the bias is positive. Uh, Unlike what we were looking at a few weeks back, where there was some bit of pressure being these two large candles. If you see, the pressure was kind of consistently building up. I think we are out of that zone, and we are likely to head higher. And a break of this will confirm continuation pattern, and that will put us back again in a good zone. From a valuation perspective, I was just checking out the valuation. I think almost all the indices are trading well above their averages in terms of trailing 12 months. So that's something which one has to be cognizant of when we are doing things. But having said that, I think India has already seen the kind of transition that everyone was talking about and hopeful of over a long period of time. So that transition is something which is reflective in the valuation. Would we become cheap soon whenever something were to go wrong? Uh, it doesn't look like India is likely to trade cheaper anytime soon. There can be some events which can definitely come and haunt us or there can be some events which can be some bit of air pocket, but I think uh, we are likely to negotiate quite a bit of air pockets as we go forward. I think it's advantage India at this point of time, but we need to look at major events and how they will kind of impact the markets. But earnings trajectory looks to be decent, and we are definitely up for decent time. Okay, so coming back to the action of the price action of the market. So this week's market action is not a great one if you look at the candles and the volumes, candles and the shape of the candle. I think there's nothing to take home, but overall the structure of the Nifty in the slightly longer period of time in this zone seems to be interesting. This is a V-shaped rally that we have seen, and we have moved above 50 DMA last week, and we carry on from there. Do we face a resistance here, come back, test out 50 DMA, and then move higher? I think that is a probability that we can look at possibly playing out over next week. But nothing to take away from the fact that the structure of Nifty is definitely positive. So if you see, this was a vertical move up, and then we came back, and then we tried to, and then we halted again. So this is, so is it possible that we may do this and then break out? That's a possibility. That's a possibility. If we break out here, do we go rush and build positions? I think the risk reward is still not in your favor. One has to work with tighter stop losses. That's what I think. Now coming to Bank Nifty, I was able to notice something interesting, right? So the structure of Bank Nifty is again a V-shaped rally, some bit of pullback, and we are so we so there's 1, 2, 3, 4, 5, 6, 7. So there's 7 days of pullback structure which has played out, and I think when you look at the weekly candle, uh, there is no specific clear indication as to what is happening, but this support is exactly at 200 DMA, which is a good thing, and we are forming okay kind of candles. But if the market overall were to kind of pick up and move up, I think we are definitely in for good times. This is what I see in Bank Nifty. When we convert this into daily chart, another interesting. So let's look at on a weekly basis what happened with Bank Nifty. So Bank Nifty ended for 0.42% higher. Uh, we Let us see if we can get volumes also into the play, because last week when we were seeing some bit of divergence in volume and price move. So volumes are again not very impressive. Volumes are not very impressive. But structure wise, there's definitely an improvement in the structure, and something that I wanted to kind of I noticed and I wanted to showcase. So we moved higher, we corrected, and then we formed a higher low. If this pivot were to be respected, or this candle were to be respected, now let us look at, see, this is definitely a positive structure. The structure seems similar, right? And so because we are talking about shorter time frame, uh, the candle the structures would form in a very short time frame, or we would notice structures in shorter time frame rather than looking at nice clean VCP kind of structures and all that. But yeah, if you were to look at this was a small stage which broke out. And how different is this? Not very different, right? So, and then we are likely to take off. So this is definitely a good structure. We have some bit of some element of caution here, because this is a 50 DMA. This is also area of resistance. So we'll have to counter this first, which is 44. So if someone were to work, uh, I think Nifty Beast is a better option than going long on Bank Nifty. So a reduced risk reward can definitely be meaningful in such kind of scenario, and then there is always opportunity to do whatever one wants to do once you see some bit of trending move. So this is an interesting space in Bank Nifty. I think what we are seeing in Bank Nifty also gets reflected in, let me look at, So you look at this. Now look at the structure. When you look at the structure, what do you think? I think Bank Nifty structure is pretty much like ICICI Bank, and if we were to go back again and see this, so do we see similar action here? One, this is one, two, three, four, three, four, five. So this is definitely interesting. What would happen is when we do this, okay, let's just look at another factor. So now tell me. Okay, so when we look at this from this, I think we are definitely up for some interesting period as far as ICICI and Bank Nifty is concerned. Let's see how it plays out. But this is definitely an interesting data point that I would also like to review and look at. Uh, okay, now let's come back to the other constituents of Nifty. So we've done Nifty, Bank Nifty, Nifty IT is in a much better structure. So while Nifty made a lower low, we are in case of IT, we made a higher high and we made a higher low, and we are just about consolidating. And if you see, we are at the cusp of a good consolidation, a very long period of consolidation, and then breaking out. We failed here, which was a gap region, which is perfectly all right. But I think there's quite a bit of negativity which has got absorbed. I think if we form a nice wide range candle here, we are up for great times as far as Nifty IT is also concerned. Nifty IT is concerned. Pharma is a continuation structure. We noticed this couple of weeks back. Let me convert this into weekly calendar. This is pharma. Last week we said this is a continuation structure and pharma is moving, trying to move higher, take out that continuation pattern. Though we saw a long wick here, but that's all right. There's nothing major to kind of worry about. This this is definitely a good wide range candle. Unfortunately, we may not have volumes here. No, we don't have volumes here. What is it that we will have? No, we don't have volumes here. Okay, so let's look at it from a indicator perspective. What is it that we are seeing? We're seeing a move above 50 DMA, well above all kind of problem areas that we were talking about. And after it took out the 200 DMA. Where are we? We are up 25%. This is a good. This is good going in pharma. There's nothing to take away from pharma, even if it consolidates here, does a pullback. I think we are definitely in for great structure as far as pharma is concerned. Metal is doing right things. Metal is contracting. I've already reviewed this some time back. So in a very long period of time, metal has been contracting and kind of trying to break out. So, so this is a long-term structure of metal. It looks good. It has consolidated for a fair period of time. I think it's advantage a lot of these large cap metal stocks. Uh, the Nifty finance structure is similar to what we have seen in case of Nifty Bank on a weekly chart. This is the support. This is a very strong support region, and we've broken it. But we've tested 200 DMA. If you were to see this from a daily moving average, we've tested 200 DMA, and we are trying to move above, indicators. It seems to be good. Let me draw your attention to one important data point that, from a fundamental perspective, RBI governor has been coming out and kind of cautioning the lenders to broad base their borrowing profile or their liability profile, because there is something which is bothering the governor, and he's trying to build in checks and balances in the banking system. So a couple of weeks back in the monetary policy, they came out and increased the risk weighted assets of unsecured lending, especially the credit card lending, credit card and personal loan. I think fintechs are something which are definitely bothering the governor, and he's coming out and uh, being very vocal about it. I think the industry veterans definitely take cognizance of what he's trying to talk about, or what he's trying to indicate, and also his actions are in equal proportion matching what he's saying. So one has to definitely look at what he's trying to suggest, which means that the smaller guys will have some bit of stress, whereas the larger guys will definitely start looking much better, because when adversity hits you, it's the larger guy, the strength of your balance sheet, which comes into play and starts making a significant impact. So that's something that one has to be cognizant of. But from a structure point of view, NBFC structure, which is Nifty Financial Services Index, which is consisting of banks and NBFCs, seem to be good. And because all the NBFCs here are fairly large ones, like Bajaj Finance of the world, Sundarams of the world, Cholas of the world, so L&T. So these are high pedigree, good quality management, and good balance sheet. And whatever some bit of stress was there in balance sheet definitely got cleaned out in uh, few of these balance sheets. So I think it's definitely advantage large cap guys, or larger guys, stronger brands as far as Nifty Finance is concerned, with respect to the RBI circular, which has been and the RBI follow through uh, comments which have been coming over last couple of weeks, or last 10 days or so. Let's look at now couple of more indices before we get into. So FMCG is trying to break out again. It is faced resistance again this week as it tried to break out. I think from a structure wise, would it take some more time to come back, consolidate, and then break out? It's anybody's guess, but there is no, we cannot find fault in the structure. This is definitely a beautiful structure. This looks a good structure to work with, and higher probability that this structure would resolve itself on the upside rather than on the downside. So this is Nifty FMCG. We covered IT. PSU Bank is definitely seeing some bit of resistance at higher levels, but look at the way with at, look at the pace at which it has moved up. So it's but obvious and natural that PSU Bank would see from any point of time. The compounding rate of PSU is phenomenal. 40% in 3 months, 6 months at an index level. So if this were to play out, let's look at what is happening in SBI, and that can be an interesting thing to look at. So what is SBI doing while all PSUs are running and rallying? SBI is just about consolidating. Test of 200 DMA below 200 DMA. It's trying to resolve itself, but good thing is it's taking support at the previous region, which is not a bad news at all. So from a longer term, yeah. So from a long term perspective, look at the way SBI has been consolidating for a long period of time and not doing much. It's been consolidating for almost now half a year, more than half a year. 200 plus days we've been consolidating here. So, so and good thing is you see the selling pressure while momentum is not on the upside, but sellers have also not been able to build more force. So it's definitely good. It's in a good structure. We should wait for the structure to kind of resolve itself either ways. Uh, the stop loss here can add a high, very beautiful risk reward in your favor. So from a swing perspective, assuming that we are here, this is here. Look at the risk reward. One is so 5, 44. Yeah, 4. 1:4 is the risk reward in SBI at this point of time. Okay, now let's come back and quickly do the review because we can't keep looking at every structure, or else it's going to take a lot of time, and I don't want to spend so much of time or consume so much of your time. So these are good structures. Infra is in a great structure. Auto is in a very beautiful structure. Is in a beautiful structure. Services we were talking about on a longer term chart. See how services is contracting. It's doing all the right things that you would want to look at in a structure. Yeah. Okay. So again, let me not get carried away by this. It's a beautiful structure. Nifty services is in a beautiful structure. Now let's come back to microcap. It's just it's going, and it's definitely not something. Look at the one-way rally that you're seeing in microcap. This is phenomenal move. If one were if one was able to catch it, it was great. It's great. You made quite a bit of money, but uh, is it fair to expect it to keep going like this to moon? Uh, I think it just does not make sense. Risk reward is not in your favor. Wait for one pullback to happen, one proper pullback to happen. There's not even a proper 10-15 days of pullback which we are seeing in this index. It's just kind of moving higher. Wait for a pullback. Let's see how. I mean, I would wait for a pullback to happen and see how it plays out. But uh, can't find fault with any of these structures. These are dizzy heights. Small cap, though it closed slightly negative for the week, it closed minus 0.4%. Can't find fault in the structure. It can always come back, test this region out, consolidate here, and then try and do something else. Uh, So all these are in beautiful structure. Money is coming, and money is coming at truckloads of money is coming in India at this point of time, is what I would say. And especially this week, FIs have again turned positive, and I think Friday's data was interesting because Friday there was some 2,500 crores of buying of FIs, which kind of obviously didn't match with the price action that we saw in Nifty mid cap or small cap. So they are going ahead and buying in small pockets, in different kind of pockets, but there's buying which is consistently happening, and it's interesting to see. So this is broadly how the structure is playing out. Now let's look at the other key indicators that we track. We'll come back to the global markets to start with, and then we'll also look at the INR because that's something that we started looking at, and it was not looking great. Nasdaq on a weekly basis has closed 1% higher, and it's taken out the previous high. So it's definitely advantage Nasdaq. There's a 5% move. So this move in a matter of 4 weeks is approximately 12%. So what do we do? They are seeing. So let it consolidate. Can it come back here, consolidate, and then again break out? Yes, high probability, and it's in a great structure. Look at the buying volumes, and that's the difference that you'll see between Bank Nifty and Nasdaq. Let's look at Dow. Even better. For a change, Dow is okay. So Nasdaq had taken the previous high. We are yet to take out the previous high as far as the Dow is concerned, but beautiful structure. I think overall US is definitely factoring in the is building in the fact that Fed has paused this time around, and sooner than later Fed will be done with its uh, you know with its commentary of inflation is high, inflation is. I think this is very clearly a sign of inflation which people believe has peaked out, and they are trying to build risk again in their portfolios. Look at SPX. This is a beautiful structure. As we saw, all the structure, I think everyone is doing exceeding exceptionally well, like clearly reflecting the buying in large cap. Let's look at Russell 200, 2000. Okay, so small caps are definitely giving good risk reward. If I were to see, small caps are yet to see the kind of optimism that we are seeing in the broad base index as far as US is concerned, and it's from COVID low. So where is US small cap? This is where it is. The US small cap at an index level has not given any returns in last 2000 days, is roughly 5 6 years, which is which puts us in a great spot. And if you were to definitely want to do something, I think this is the space that you should look at. A breakout here would mean that your small cap can just do some magic. So it has to go into the watch list. Russell 2000 has to go into watch list. And here it goes. So global markets are doing right things. Indian markets, most of the structures are doing right things. And Bank Nifty for a change is also forming a great shape. So it looks like we are up for another leg of possible up move in Indian markets, but US it looks slightly much better. Let's look at 10-year benchmark. The yields for the week have closed higher at 727. We are respecting this upward trend line, and also respecting this trend line. And we are doing this. And on daily chart, we have taken support at, we've just about moved above TDMA. We took support at 200 TMA, not been able to break it. So let's see when and how it can break out. But I am hopeful of this getting resolved like this. Obviously, it can consolidate and then. So this is how we are seeing. Let's definitely look at INR pair because we spoke about it a couple of times. This is gold. Gold is in a beautiful structure. Is contracted. It's itching to break out. We'll just look at last two structures and then we will have a quick summary. So UK Brent crude, no major action, but trending south, yet to form. Is this higher low? We don't know, but this is advantage for commodity importers like India, and then INR US. Same structure. We continue to consolidate in this region, and then let's see what how we resolve from here. But it's definitely not looking like it's gonna resolve on the downside. It doesn't seem like we are going to head south very soon. So that's a broad view as far as the market is concerned. So let me kind of quickly summarize. Uh, so if you look at the structures of most of the Indian markets, whether it is Nifty, Bank Nifty, FMCG, all of them are kind of indicating towards a positive. All of them have a positive bias, especially Bank Nifty with the way we kind of saw the structure, I think we are definitely looking like it can resolve on the upside, or it looks like the probability is high that we resolve on the upside rather than going for another round of deep correction. So, so Bank Nifty looks definitely interesting. That's an area which can turn out to be high risk reward kind of game. And when you look at the global markets, most of them are doing pretty well. And from a slightly longer term view, Russell 2000 is something which is consolidating and has not given return over a very long period of time. So if it breaks out, it can definitely offer huge opportunities. So that's another interesting area that I have added to my watch list. uh, Currency is not looking great. Oil is after correction, it's kind of just about there and consolidating there. Gold is definitely itching to break out. So overall, I think it's a mixed world. The reactions are very mixed. So you know, uh, risk and risk free or risk and risk averse asset class, both of them are wanting to do good. So as a practitioner of asset allocation and asset categories. What do you do? So you build gold to hedge, but gold is also likely to move up, and so is equities. So it's a very different kind of world. Uh, so it's an interesting world, and thank you so much for joining. And it was a very interesting. So I picked up quite a few newer data points, or I looked at few of the charts which I didn't do while doing my own review. But and that's the beauty of this review. The beauty of this review is exactly the fact that when you are applying yourself 100% is when you try to link one thought to the other and try and evolve at certain decisions, a certain thought process. For example, I didn't look at Russell 2000, what's happening. So so this is what I do the review for, rather than trying to look at building a base on this channel. So this is what exactly I mean when I say that I want to do this as my own homework and see my thoughts. So with that, I'll come to an end of this review. I definitely showed few stock specific charts. They are not, sorry, they are not from a recommendation perspective. They are only from a reviewing structure perspective. And uh, thank you so much for being here, and look forward to seeing you again. Have a great weekend.